The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is May 9th, and it's about 10 to 1. And this is another episode of CFRN Thursday where I go over the trade setup, the CFRN trade setup in slow motion. So the game plan this afternoon, number one, is I'm going to go over a couple disclaimers that I have to present before I go over any material. So that's number one, and that's why I primarily open the room up a little bit early so I can get that out of the way so we could spend a full hour in the room. Then secondly, I'll go over the trade setup, just kind of break it down. This is going to be the same setup that you see inside the training room, the same one that Michael is using to put trades on and take off. All right, so I'll break that down, and then what we'll do is we'll get into a live market setting and find those setups and put trades on, manage them, and then take them off. And the platform that I'm featuring is the platform that I support, which is DtPro. All right, so it'll be about basically a three-part kind of segment here, and it should take us about an hour. Now, there's some things that are moving around, so there should be enough activity where we'll see a lot of decent examples of where to get in, where to get out. Is this a setup? Is this not a setup? That kind of thing. If you're brand new or you're on the trial, this is going to be a good cheat sheet or a syllabus that you can lean on moving forward. The goal again for you guys is to give you an eyes wide open approach. So at the end of the trial, when you get that information from CFRN on whether you want to take the leap and join CFRN, well, you have more of you get more resources that you've been exposed to, and then hopefully that makes a better decision-making process on your end. Okay, so we'll go over that, and then for those guys that are are already CFRN members that are hanging out every Thursday, again, this is your time to ask questions. I'm going to go over some traps and pitfalls that people kind of fall into. I'm going to labor over probably 2 or 3 major things that people run into just over the years. Same thing over and over and over again that seem to trouble people if they're spinning their wheels. So I'll go over that stuff too. All right. So the idea really is to open your eyes if you're brand new, and if you are a CFRN member, it gives you an opportunity to hang out in front of the markets and get to know the personalities of the markets that we're trading, and some more screen sharing time, and I'll learn a little bit more of you, especially if you're still in demo mode and you're not 100% confident in pushing the button yet. So that's the scoop for this afternoon and the next hour. Okay. Let me get my marker out here, and we are going to go over the disclaimers. Okay, so again, I could just throw this up and tell you to take a quick look at it, but now again, I've been doing this for almost 25 years, and I've really seen the good, the bad, and the ugly when it comes to this business. So I like to throw this out and talk about it so you are aware of what could happen. Okay. And the disclaimer is really a label it's a warning flag for those that are entering into our space, right? Because futures is a leveraged business, okay? So what basically says is, look, you can lose everything and some in your trading account if you're not using stops, if you don't have a trading plan, if you don't have an exit strategy, if you're not engaged in what's going on in the marketplace or the news. If you're not doing all that stuff and you're not aware what's going on, this disclaimer will hit you right smack dab in the face, and I've seen it. The good thing is, if you decide to go down the CFRN path, well, they have a set of rules, right? We're going to go over those rules right after this. Every trade has an 8-tick stop attached to it, so you are going to be using a stop loss. Not only that, you're going to be on a 4-tick range chart, so you have to be actively engaged in what's going on, what's in front of you. You have to be in front of a computer, in front of the screen. There's no shortcut. Okay, you'll have to be engaged. Okay, CFRN, they do not trade around news items, so you'll be aware of when those come out, when they come out, and how sensitive the market is to those news items. So again, I don't necessarily like to start off the webinar with a grueling, scary disclaimer, but the fact is, this is a reality. People run into it. They get beat up by it, and that's because they don't have a set of rules. They're not using stop losses. They don't have a trading plan, all that other stuff. Okay, so you can lose everything and some in your trading account if you're not doing those simple things. The good thing is, if you go down the CFRN path, you're going to learn some of that stuff. So maybe this disclaimer gets watered down a little bit. Okay, but and in the end, there has to be a level of discipline on your part, right? So that's that part of it. All right. The other thing is, the funds that you're putting into the trading account should be risk capital. Okay, funds that you can afford to lose if that happens. Doesn't trade your lifestyle. So you have to consider that when you're opening up the trading account. All right. My experience over 8-9 years with CFRN, usually the guys that get to their room, their training, their tools, they're kind of numb by this. They've been around. They've been to this guy and that guy, and they have this set of tools and these set of tools, and this has already beaten them up a few times. So again, it's really for those guys that are entering into our space, wondering what the heck this is all about, and so it has to be talked about. So, all right. This part here is my relationship with CFRN. Okay, so I represent Daniel's Trading. Okay, I support the platform, the brokerage, and the execution part of it. Okay, the platform that you're looking at right here on the screen is called DtPro. Their indicators, CFRN, is built inside the platform. Okay, it's right there. With a few right clicks, you'll have the indicators up right in front of you for 5 business days while you're on the trial. Okay, DtPro, you just sign up. You'll get a username and password. You'll get a link. All you have to do is download it, enter in the username and password. The data comes with it. You're not going to go out looking for a data provider. It comes with it directly from the exchange. Okay, so this is what I represent, that side of it. Okay, get rid of this. CFRN, it's their tools, right? It's their indicators. They're the educator. It's their software. Okay, so I don't work for CFRN, and CFRN doesn't work for us. Okay, they're a third-party provider. Bottom line. Okay, in the end, if you decide, hey, I want to be a CFRN member, any money that gets exchanged is going to be between you and them. Okay, anything on their website is between you and them. Their videos, their Thursday night workshops, the Logic product, Logic 247, right? Any questions about that, you go directly to them. Okay, the concierge trade alerts, the daily doubles, all that stuff, you could reach out directly to CFRN. Now, a lot of times, guys will come out and reach out to me because maybe Dwayne's on the radio and Michael's, running around doing what he's doing after the training room. So a lot of times people will reach out to me and say, hey, can you have those guys give me a call? Or, hey, I have a question about this. That's fair game. Okay. So if you have a question about a particular setup, or about the platform or downloading something, you know, the biggest advantage between us and Ninja, and the indicators are available on Ninja, is that you get to at least to talk to a live body. Okay, you can call me direct. I'll pick up, and we can just discuss anything that you have going on. Okay. I'm in the room every single morning. Okay. I'm in the background. I'm letting Mike do his thing. If he steps away and I see something that I think needs to be talked about, I'll pop in and answer questions like that. All right. So again, our relationship, you know, it started probably 8 years ago when CFRN was just a radio program, and I ran into Dwayne. I forget how I did, but he said, "Hey, come on the radio program. You know, we have viewers and listeners that just have tons of questions." So I was just part of the, you know, part of the team back then, just answering questions, talking about market stuff like that. The biggest thing that I saw in that period of time is that people kept asking them, "Show me how, show me how, show me how." And so together, he got together with Mike, and you know, both of them are trade station developers, and our platform reads easy language. So they coded everything in our platform, so it was kind of perfect timing. Platform is free. The only thing that you pay for now is data, and so it was kind of perfect fit. All right. So basically, I could support the platform. I could work on that function of it, and you know, Dwayne could do the radio program, and Mike could do the training room, and we all kind of work together for, you know, the common denominator, which is hopefully try to put, you know, put you guys in the right direction. Okay. So that's the story between Dwayne and I and CFRN. So has to be disclosed, maybe not in that much detail, but I like to be transparent about it. So like the disclaimers, you know, I don't like to gloss over it because that's not good for everyone. You should know going into every, you know, your eyes should be wide open. Bottom line, that's a good policy. It's worked for me for 25 years. All right, enough of that. Let's get into the trade setup. First order of business is getting on the time frame. We are in a 4-tick range chart. Okay, so how do we get there if we have DtPro? Here is the platform. You know, in fact, let me take off the live. All right, I'm in demo mode. I just shut down the live platform. All right. How do we get to the 4-tick range chart, right? You might be on an hourly, you might be on a 30-minute, especially if you're following logic. You might be on a 5-minute time-based chart. Whatever the case may be, you need to get to a 4-tick range. So see the time frame up in the upper left-hand corner of the chart? There's a drop-down box. Just left-click on it. Select custom, but select range bar. Okay? Range bar. Make that one look like a 4. Okay? Then hit OK. This is the ES chart. This is S&P E-mini on a 4-tick range chart right now. Okay? Here's the first trap that people fall into. They hit the drop-down box. They run down the custom. They did that great, but they select tick bar because, you know, we're always talking about an 8-tick stop and a 10-tick target, and everything's kind of associated with ticks when we're talking about CFRN. So they naturally go to tick bar and they change that 2 to 4, and your ES chart looks like this. Okay, if you're staring at something like this, you fell into the first trap. So just drop down box, custom, select range bar, make that one look like a 4, and then now you're back on the path. Okay, so in the 4-tick range chart. Okay, that's the first order of business. All right, next we're going to work on the top portion of the chart here. Okay, some basic stuff, especially if you're brand new. Now, 1 second, let me. Okay, sorry, I had my phone buzzing. And by the way, this is live, so My phone starts buzzing. I'm going to have to put you guys on the hold, hit the mute button. So it's not like I disappeared. I just had to pick up the line. Okay. Top portion of the chart, some buzzwords. The red and blue line is referred to as the MA1. Nothing really fancy about it. It's the MA1. The green line, okay, is referred to as the BBC. The BBC is short for bullish, bearish cross. Okay, the BBC is this green line. Okay, together make up step number 1. Okay, which is this. When the MA1 is red and crossing the BBC, that is the bearish cross. If the MA1 is blue and crossing the BBC, that is a bullish cross. Okay, the one that's highlighted here is a bearish cross because the MA1 is red. So now I want you to be thinking about color here. Okay, because when everything is the same color, the MA1 and the cycle, and markets are trending, and if it's a bearish setup, then we're looking for a red candle. If it's a bullish setup, we're looking for a blue candle. And everything's the same color, it stacks up all the probabilities in our favor. Okay, so the one that's highlighted here is a bearish cross because the MA1 is red and crossing the BBC. Okay, that is step number 1, the cross. Okay, now after the cross, what we're looking for is a bullish. We're looking for basically step number 2, call it. Okay, after the cross, what we're looking for the market to do is we're looking for the market to gravitate toward the BBC as it does here. Okay, that's a normal thing for the market to do after the cross. All right, so in the process of the market gravitating toward that green line, okay, what I'm going to talk about, and what Michael does a lot of times in the training room, is we're going to draw a trend line, okay, as it's going that way, okay, as it's flagging toward the BBC. Because the normal thing for the market to do is to touch the green line, and then we're looking for a close in the direction of the trend, which is highlighted by the red arrow. Okay, that is step number 2. All right, so we have the bearish cross. The next thing for the market to do is for the market to gravitate toward the BBC. As soon as we see it touch that green line and close in the direction of the trend, okay, if we have a red MA1 or a bearish cross, we should be looking for a red candle. Okay, if we have a bullish cross or a blue MA1, then we want to be looking for a blue candle or a green candle, which would give us a bullish close. Okay, so we're looking for a close in the direction of the trend. Okay, that is step number 2. Okay, note this. I didn't say go short, go long, go short. Okay, because again, we're expecting the market to actually try to gravitate toward that green line. Now, in some cases, and we're going to go over this in the next 15 minutes or so, there's going to be cases where the market just has so much bearish and bullish momentum, it can't get to the green line like it does here, right? It's starting to do it, and then it just goes down, right? It doesn't quite get there, okay? So what you're going to learn in the process is you're going to learn to draw a trend line. Because if this scenario happens, as it did here, and it does break that trend line, okay, and then step number 3 comes into play, like we're going to go over next, you're going to take action. Okay, you'll be in a position to take action. Okay, hold on. Actually, 1 second. Dwayne's looking for me, so stand by. All right. Well, I'll get back to Dwayne. All right. I got off the path there. So step number 1, check. Step number 2, check. You have to close in the direction of the trend. So now we're going to work on the oscillator portion of the chart, which is called the slingshot. Okay. That's going to kind of lead us into this step number 3, because when step 1 is in play and we have step 2 in play, now our eyes gravitate toward the slingshot. Okay, and some buzzwords here. The red and blue line is referred to as the cycle. Okay, and what the cycle is telling us is this. The cycle being red and having a good slope to it, to the downside, it's saying, look, the NASDAQ on a 4-tick range chart, okay, has some bearish momentum. Okay, that's what this is telling us. Over here, the cycle is blue. So what this is telling us, the market has bullish momentum. Okay, so remember I talked about everything being the same color. Well, we got a red MA1, we get a down close, and now we have a red cycle. Okay, everything's the same color. Okay, this is telling us, hey, the momentum is bearish. Okay, and this price action here, which is normal, associated with the green line pulling away from the cycle, okay, is step number 3, which is the divergence or the separation Michael is talking about in the training room. This space here, okay, that's the space, like a slingshot. You're pulling the green line back against the slingshot, okay? And it's true that the further you pull it back, or the more space you have, the more room the market has to express itself, right? The shallower the pullback, well, you shouldn't expect that much. Because in the end, what we expect to happen, again, the normal thing, is for this green line to pull away, and then ultimately come down and close the gap and touch the cycle. It's at this point, okay, the market should be making a new swing low, and this is where we're getting out of the trade. Okay, so lots happening there. The trade actually exists here in the slingshot. Okay, the momentum is bearish. The market should be going down. Okay, this price action, which is normal, which is step number 2, associated with this green line pulling away, is creating the separation. This is a rally in an ongoing downtrend. That's what it's implying. And this down close, waiting for it, is another variable. This is, you know what, maybe that's what's happening. And when step number 1 is present, and step number 2 is along the way, and then now we have step 3 in play, and the market is making lower lows or trending, man, there's nothing else to do but get inside the DOM and get short. Because what we expect to happen is the green line to ultimately come down, picture perfect, and touch the cycle. And this is where we're going to get out of the trade, right here. Because what we expect to happen after that, the green line is going to do this against the cycle. Boom, 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 until it turns blue. So the momentum's turned bullish on us, right? Then we're looking for the green line to get underneath it. Okay, get underneath it and create bullish divergence. All right, so in a sense, you're selling that top, selling that top, selling that rally, buying this dip, buying this dip. Okay, and then along the way, you're trailing your stop, you're trailing your stop, you're trailing your stop until it's time to exit. Okay, so the trade exists here in the slingshot. Okay, so we're looking for all the normal things to happen. Now we know the markets aren't perfect and things change, but what you can control is the risk. So every trade has an 8-tick stop attached to it, right? So if you're brand new and you're just dead wrong and the market does something silly, you're trading the gold and the crude, you're losing $80 per contract. If you're trading the S&P, it's closer to $100. If it's a soybeans, closer to $100. If it's the mini Dow, it's closer to $40. But every trade has an 8-tick stop attached to it. Okay. if you're brand new, you're wondering, what am I signing up for? You're not learning to pick the top here and pick the bottom here. You trade it from point A to point Z. That's not what you're signing up for. You're signing up to take a piece out of the middle, okay? And along the way, trail the stop, trail the stop, trail the stop, trail the stop until it's time to get out. And then you're going to look for the pattern to happen all over again, okay? So you're scalping, right? And you're on a 4-tick range chart. So you're looking at the market under a microscope. So you have to be in front of the screens, right? You have to be engaged in what's going on in the marketplace. Okay, you need to have some discipline. You need to be able to follow some rules. That's a hard thing for people to do. Okay. What is this? Okay. So you have to have a set of rules. You're going to have to learn the platform that you're trading. Okay. This, if you're brand new, this is the depth of market. This is the tower that we buy. Or if we get something that says go long, we're going to be left clicking in the green. If we find something that says, hey, we need to get short, we're going to be left clicking in the red. Okay. And if the market's going down, we make money. If we get long, the market goes up, we're going to make money that way. But this is where we do all the execution. So our eyes are kind of focused over here. All right. And then we gravitate toward the DOM. That's what we call it, depth of market. And we do all of our button pushing right here. Okay. And that's what Michael shows you in the training room. And that's what I'm going to show you, but in slow motion. Okay. So that's it. So that's what we're going to be looking for the next 45 minutes. Okay. We're going to be looking for this trade setup in the market. Okay. So that's it. So it's day one. You have your notebook out. What's the number one thing you should have on your notebook? It should be on top of the page. And it should read, are we trending? Okay, that's number one. Okay, are we trending? Are we making lower lows and higher highs? Okay. Right now we're looking at the S&P E-mini, and the first thing that you should do and get in the habit of doing is hitting this zoom out button right here. Okay, just a few left clicks, because this will tell you a lot. Okay, sometimes we get hypnotized by Michael's charts in the morning, right? They're blowing up pretty good. He has got 3 or 4 floating. Okay, so we see something like this. So it gets magnified a little bit, okay? So get in the habit of zooming out, because if you take a few clicks, you might find out, hey, something that looks like it's trending may just be inside a bigger bubble, okay? And for the moment, the ES is finding a little bit of support here. We're a little bit sideways here, okay? So I don't think we're trending, all right? And if you're not sure about it, okay, look at dynamic support and the resistance dots side by side here. That's a good indication we're trading sideways, and you shouldn't push any buttons. Okay. The other thing is if you're unsure, just don't do anything. Okay. Just sit out. When in doubt, sit out. Okay. You're going to be on a 4-tick range chart. You're going to be looking at probably 3 or 4 different markets. There's going to be plenty of opportunity that come your way. Okay. So when in doubt, stay out. And then if you're unsure, look at the dynamic support resistance dots. Those will give you some clues. All right. Let me erase those. All right. What we do have here is step number 1, right? We have the bullish cross. The MA1 is blue and crossing the BBC, right? That is step number 1, right? Step number 2 is what? For the market to do the normal thing, which is pull back to the BBC. That's the screen line here, right? Green line right here. All right. So it has some variables shaping up here. There's some resistance here it might have trouble with. So we would expect the market to gravitate toward that green line. Okay. So we'll see what happens. So for the moment, we said, look, the S&P is sideways. Okay. And I identified that by zooming out. Okay. But it's got step 1 in place. And so now we would be looking for step number 2. Just to see what's going on. Okay, so let's table that. Let's go to crude oil. Okay, notice the first thing I do, 1, 2, 3, zoom out a little bit and see what's going on. Okay, so number one, here's what sticks out to me, that we're sideways again in the crude. Notice, hey, that looks trending, right? In fact, look at this. Step number one, bearish cross. The MA1 is crossing the BBC. The normal thing for the market to do to gravitate toward the BBC. Not only does it on this candle, but we also have the down close, right? So this is step number two. Is the cycle red? Yes. Is the MA1 red? Yes. Do we have a pull away? Yes. It's got all the variables there. Okay. So this close here, all right, would be the short. It's got all the variables there. Okay. But as I said earlier, if you zoom out just a little bit, you're going to find, are we? Support here, support here, support here, support here. Well, maybe we're not trending so much, right? Because we found support here. All right. Did it offer you something right here? Yeah, a little bit. Okay. But you notice how it's kind of stuffed in a box now? We're still trading in this range. That's because we're sideways. Okay. So that was a good one to point out because it had all the variables to it. Okay. It had everything. Okay. The easy and obvious trade was there. It was lacking a trend. And I still think it's sideways. Okay. So that's what you're looking for. Okay. This would be the perfect scenario. Okay. Now, as I said, I'll skip that point. Let me see if I can't find something different. Okay, here's a good point. Okay. Again, notice this is the natural gas, and I zoom out, so I can't stress that enough. Get in the habit of doing that. Okay. Here's another thing, another habit that you want to get into. Okay. As soon as you get the cross, okay, here's the bullish cross, right? As soon as that happens, your next action is to activate the trend line right here. It's right here on DtPro, left click. Okay. Because what you're going to do is you're looking for that normal thing, right? You're looking for the market to pull back to the BBC. So when that's happening, you want to get in the habit of drawing a trend line. Okay, just like that. Drawing a trend line. Here's a bearish cross here, right? The normal thing for the market to do, pull back to the BBC. In the process, you want to get in the habit of drawing the trend line. Okay, get in the habit of doing that. All right, there's two reasons why. Number one, we don't know if it'll get there. Okay, and if it doesn't, and it breaks down or it takes off, right? And you have step number three, which is the divergence. Okay, then you're in the position to just go inside the DOM here and take action, right? Either get long or you get short. Okay, you get in the habit of doing that. Okay, it eliminates the risk of you trying to find the trend line after the fact, fumbling around and possibly missing an opportunity. So if you create the habit now of after the crosses drawing trend lines, okay, you eliminate that for the most part. Okay, so another quick way of deleting trend lines, if you have a lot of them marked up on your chart, see the select all button on the bottom left hand side of the chart. You left click and engage that. This X will darken up. If you left click on it, it'll remove all your trend lines. Okay, so I want to labor that point because you're going to see Mike a lot of times drawing trend lines. Okay, and you're going to see different types. Okay, here's a momentum trade that Michael would advertise in the room. Okay, There's another pullback to the BBC, okay, and a down close. So you really got to get in the habit of drawing the trend lines. All right, so that's the natural gas. We did have the pullback to the BBC. What's good about that is we do have step number 3. We have a blue cycle, and the green line is pulling away. So what we would expect to happen ultimately is the green line to get into the cycle, okay, and the natural gas making a new pivot high, okay. And when the green line, okay, this green line gets into the cycle, that's where we take off the trade, period. That's your exit strategy right there, okay. So right now we did make a higher high here, okay. Is it trending? I wouldn't get excited about seeing it just get over the edge just a little bit. So I'm not that. That's not an easy and obvious trade for me to advertise. So, all right, let's move on to the gold. Let's see if we can't find something there. Okay, here's a good example. Again, zooming out. Okay, we get some shallower, higher highs, but let's do this. So give me a chance to do something here. We had the bullish cross back here, right? That MA1 is blue, and we're getting the pullback to the BBC, correct? Activate your trend line and draw it. Okay, that's the trend line. That's what you should look like. Okay, I said there's 2 reasons why we do this. Number 1, we never know if it'll get back to the BBC. Well, in this case, it did, correct? It got to the BBC. So right now, we're looking for at least an up close or a blue candle. So we're not going to take action to the long side until we get that close. But the other reason why you draw it is this. I pointed out here. At some point, the cycle might change color on it, as it does here. If the cycle is the wrong color, okay, as it is here, it's red and it should be blue. This trend line is required, okay? Not only is that required, you're going to need a close above the trend line in order for you to take action, okay? You'll need a close above the trend line in order for you to take action, okay? So that's why you get in the habit of drawing the trend line in advance, okay? Because when it does, you're in a position to hop over into the DOM and push the button. Okay, you're not fumbling with the trend line after the fact. All right. Now, there's another point I could make from the same chart. So follow along, okay, especially if you're new. Here is what you're going to hear inside the training room. Michael is going to start calling out highs and lows, right? So, right now we know the low is 1285.30. The height of each candle is 4 ticks in the height. We know that because we're on a 4-tick range chart. The height of each candle is 4 ticks in height. Okay? So if the low is 1285.30, add 4 to it, 1285.70. Okay? A close at 1285.70 would be above this downtrend line, correct? Okay, that would put it right about here. Okay, that would be a close above. So what Michael does, and what you can do, and this is being proactive, okay, here's what Mike's going to do. He's going to add or subtract 5 to the high or low. Okay, so if the low is 85.30, he will go inside the green. Instead of left clicking, he will right click. He will create a stop. Okay, this is how he's being proactive. Okay, so why is he doing that? 2 reasons. He knows it'll be above the trend line if it qualifies. Okay, and number 2, for whatever reason this thing takes off, it's going to take him with it. Okay, it's gonna go. He's gonna go with the trade. Okay, so that's why he's doing that. So sometimes over the years, what would happen is, markets would take off, and then he'd bring his DOM into full view, and people would say, "How the heck did you get into that? That thing just took off." Well, here's the explanation. Okay, he's getting in on a stop. Okay, he's being proactive, and he can do that because we know the height of each candle is 4 ticks in height. Okay, so remember that when you're hearing him start talking about highs and lows, he's preparing himself to buy it above the market or sell it below the market. And the reason he's doing it, the market takes off, he's going to go with it. The market breaks down, he's going down with it. It's a pure momentum. Okay, that's what he's doing. Okay, so prepare yourself for that. So we have an order in right here to get long if it gets above. Okay, now the question in the box is, what are we trending? Okay, I'm zooming out, and I don't see a lot of trend action here. I see a lot of sideways action. Look, we found a lot of support here. Okay, so no, I'm not a big fan of this. Not only that, the cycle is red. So now that's watering down the probabilities on this guy anyhow, right? So no, I'm not a big fan of this right now, all right? But it gave me the idea gave me some talking points to talk about. All right, so I'm going to cancel the order. We're going to move on to something that might be moving. Let's go to the currencies. The euro currency. Are we trending? Have it to get into? All right, so let me go backwards here, because Mark's got a good question, and probably because I wasn't real clear on it. So all you have to do, Mark, and this is for anyone, okay? Add or subtract 5. That's the magic number to then the current high or low. So if the low is 1285.20, add 5, and that's the number you right-click on in that example. Why 5? Well, it takes 4 candles, 4 ticks, right? We've already created that here, 4 ticks. The high has been 1285.60, the low has been 1285.20. Okay? So if it goes up 1285.70, well, not only do we have 4 tick, but now we have the second candle building. Okay? So that's why you always use 5. So Mark's next question is, well, what if it makes a new low? Simple. Cancel the order. Why? Because we made a lower low. So then you have to make the adjustment, right? So if the low is 1285.20 and we start breaking down and making another new low, you got to add 5 to whatever then the current low is. Then the current low is of the candle that you're building off of. Okay? And I'm talking about getting long because we have a potential bullish setup. Okay? So the magic number is 5. Okay? Add or subtract 5. Okay? That is, there's 2 ways of doing this really to get into trades. Okay? Execution 101 is wait for it to qualify and left click. Okay? Make it simple, left click in the DOM and place the order on a limit order. Or trading or execution 201 is being proactive, and then you're buying it above the market in the event that it takes off. Okay. So again, that's how you do that. Okay. So I think if this is your first week or you're just learning, learn how to left click, and then you can graduate to step 2. That's how I would do it, Mark. Okay. And again, if we're gonna get long, we're gonna left click. Okay, we just left click. The way to cancel the order is just hit this hotkey here. Cancel all. Easiest way to get rid of it. Okay?
Yeah, literally.
All right, let's see what's going on with the indices. Okay, zoom out, zoom out, zoom out. Okay? So we broke this congestion. Here's a perfect example why we draw the trend line. Okay. 1, 2, we're starting to gravitate toward the BBC, right? This is a good example. Bullish cross. Okay, the market starts gravitating toward the green line, which is the BBC. We get our trust your trend line out and start drawing, right? And then all of a sudden we get a close above the trend line, right? The cycle is blue, and we get bullish separation. The normal thing for the market to do, green line is supposed to get into the cycle. The market makes a new pivot high. Along the way, we're moving the stop. Okay? Right now, we're pulling back to the BBC again, right? Do we have a higher swing? No. We need a higher swing before we can take action. How does our cycle look? It's sloppy. We don't even have any divergence. Okay? So nothing to be done here. Okay? So stand up parade rest for the moment. All right, let me cancel that trend line. Okay? You'll go through this process over time. This doesn't, oh, okay. Doesn't happen overnight. Let me think. All right, so let's go to, try to look at some currencies, okay? All right, so the euro, right now, we're building some higher highs, okay? Nothing going on there. Here is the British pound. We were congesting here. Let me make a point here, okay? All right, so here we go. Disqualifiers are a big thing. We know our number one disqualifier is a market that's trading sideways, right? This is sideways action, okay? That's a disqualifier. That means we don't push any buttons, okay? All right, let me tell Sam I'll call him back. 1 second. Hey, Sam, can I call you right back? All right, thanks. The second disqualifier is this, okay? And this is a trap that people fall into because they get hypnotized by what the market's doing. They get anxious and they want to get some involvement in, and they're not looking clearly. As I said earlier, the normal thing for the market to do is to pull back to the BBC, which is this green line, right? So now not only are we looking for the touch, but we're also looking for the close in the direction, okay, which is here. And we also know that, hey, we want everything to be the same color, okay? So blue is good for the home team if we're getting long. But notice how it goes red, blue, red, blue, red, blue. All of a sudden, this thing looks like it's falling off a cliff, and it's at a 45-degree angle against us. So not only is it a different color, which is watering down the probability, but now it's going against us at a 45-degree angle. Okay, this is no good. That is disqualifier number 2. Okay, if it's the wrong color, it waters down the probability. And number 2, if it's going off a slope here like this, that's no good. Okay, remember that. But then you're going to say, well, look at all this that we missed. Well, that's going to happen. But most times, that's going to hit you in the face. Usually results in sideways action, stop out, a break even. Okay? Rarely it leads into something like that. It happens. Okay? It'll invite you to break the rules when you see this. Okay? That's all you need is one, right, before you want to start tweaking it, breaking rules. Okay? Missed opportunities. Okay? So, no, this is no. Number 2, okay, this disqualifier. The third one is usually associated with this kind of action here, which is what we call a cycle reset. Michael will refer to that, is the black step line. It's great for trailing a stop when you catch a runner. But ultimately, as the market is pulling back to the BBC, If that black step line also pierces the BBC, that's disqualifier number 3, usually associated with this, okay, with number 2. All right, so in a nutshell, we have 3 disqualifiers. 1, a lack of trend, okay, sideways action, no good. 2, cycle is the wrong color, but now it's sloping at a 45-degree angle against us, no good for the home team. And number 3, which is usually associated with number 2, the black step line piercing the BBC. Okay? Again, when in doubt, stay out. Okay? If you're not sure if that's a 45-degree angle, you might be looking at it. It's 20, it's 15, it's 25. Don't do it. Okay? You're on a 4-tick range chart. You're going to be looking at a half a dozen markets. Look for the easy and obvious. That's all you have to do. Okay? All right. In the room, you're going to see Michael take a lot of those trades. You'll see him, okay, when the cycle is flat. Okay, this is fair game. This is fair game when it's flat. Okay? You'll see Michael take someone there like this. It might be curling over a little bit. Okay? My opinion, okay, and my recommendation to you, especially if you're new, is wait for the ones that are just kind of hitting you in the face. So there's nothing else for you to kind of filter out. Okay, if everything was the same color, go do it. Get on it. Okay, not every trade's going to be a winner, but if you can put all the probabilities in your favor and you're confident that you're pushing the button is correct, then you're going to feel a lot better. All right, let's go back to crude oil. Okay, we're still stuck. Still stuck on the range. Okay, notice how I zoomed out. That's a hot mess right now. Okay, so that's the crude oil. And we identified that way back here. Okay, so this is where people get chopped up. Okay, they see this, and what they didn't see was, holy smokes, I didn't see that. And so if they're losing in and out here somewhere, somehow, that's usually the biggest reason. All right, the natural gas is kind of laboring here, so there's nothing going on here. Let's go back to the crazy indices, because right now they just want to be crazy. Right now we have to make some higher highs before we can get excited about that. Maybe that's happening now. So hold on. Notice I'm zooming out to get a little bit more detail of what's going on over here. Okay. It's, you know, I'm going to come back to that one. Okay. So here's what I'm going to do.
Yeah.
All right. What did I just do? I don't want you guys to do anything.
Yeah.
But here's what I did. I want to show you how to put a trade on. Okay. Okay. We identified the gold not going anywhere quickly. Okay. And there's a lot of bad things here, but I'm going to go through the motions. Okay. I just want to have you listen here. Here's our bullish cross. MA1 is blue, crossing the BBC, correct? Okay. When that happens, okay, what we want to do is engage the trend line, right? We want to draw a trend line off the tops, okay? Because we never know if it'll get to the BBC or the cycle turns color on us, correct? Well, it did turn color on us because we did touch the BBC and we had the up close, okay? This turned color on us, and here is the close above the trend line. Okay?
Yeah.
So you just said this is at a 45-degree angle. Don't do the trade. Totally agree. You should not touch this trade whatsoever. Okay? But what I did want to show you is this. When it does qualify, all you have to do is left-click in the green area. This is where we buy it. And left-click. That creates a limit order. But not only that, what I did also do, see this little number 1 over here? That is our stop loss. Okay? So as I said earlier, every trade has an 8-tick stop attached to it, right? Okay. These are the rules, right? All trades have an 8-tick stop. All right. Why is this guy sending me that? So the cool thing about the DOM is this. Okay, this is the DOM of the tower we are buying and selling on. See this little Tinker Toy triangle? When I left click on it, the bottom of the DOM opens up. Okay. If you check off sell stop and buy stop, just these two guys here, okay, and right click over the word buy stop and go factor in ticks, and right click over the word sell stop, factor in ticks, and make the factor 8. Anytime you get in, long or short, it will place the stop loss for you. That's one less click you have to, click of the button you have to do. Okay? It's a left click to get into the market. That creates a limit order. Okay, that's what I just did. So if you're brand new, okay, my recommendation to you is do a lot of left clicking. Okay? When the market qualifies, when you get a setup, go inside the DOM and left click. Okay? Over here, this number 1 is your stop loss. It is working. How do you know? Should do this. This box should always be open. This one here, your working orders box. Here's my stop. It's represented in this box. It's also represented here on the DOM. Okay. What you can do, and what Michael is doing, is he's got the bracket set. It's called the bracket order. So when the market does move up in our favor, okay, as it's doing now a little bit, he will left click over the number 1 and drag it and release it. Drag it and release it. That's all he's doing. Okay? That's how he's reducing his risk. That's how he's trailing his stop. Okay? Just drag, drop, drag, drop. So notice anytime I move this, price on this one is also moving. Okay? So why is this box important? At the end of the day, or at the end of any trade, this box should be zeroed out. There should be nothing in there. If you do, that means you have a loose end. There's something you had working that you forgot about. And that's another thing that people fall into, another pit. Okay? They forget they had an order working somehow, some way, and they get filled. And they call me out, freaking out. Okay? All right. So we are long from 1280, 85.40. As I said earlier, I didn't like the slope of this. Okay? The other thing is, talked about, are we really trending? We might just be sideways here. So that's why we didn't do the easy and obvious. The reason I did this is to show you how to build a bracket, how to enter a trade in its simplest way, left clicking, and show you how to modify the stop. Okay? The money management rules are real simple. If the market moves 4 ticks in your favor, 1, 2, 3, 4, gets to 1285.80, we move the stop to break even. What's break even? Our entry. Our entry is right there. It's also right here advertised. It's also advertised on the chart. Right here. There's 3 places to let you know, hey man, you're long. Okay, you're in the market. Okay? So, so 4 ticks in our favor. Yep, CMR. Or a close on the other side of the MA1. There's that buzzword. The MA1 is the red and blue line right here. Okay, so if we get a close over the MA1, we also move the stop to break even. Okay, so we're starting to do that now. So here, just for the shakes of it, take that 1, drag it up, there, to our entry. That's it. We have no risk on the table. The only risk we have is if we do get stopped out, we pay the commission. Okay, that's it. That's what you can control. All right. So they use aggressive risk management. Okay, 4 ticks in their favor, that stop goes to your entry. If we close on the other side of the MA1, right, we're moving the stop to our entry. Okay, and in the end, what we're looking for the market to do, everything is built in the slingshot, right? We're looking for the green line to pull away as it's doing here. We're actually looking for this action here. We're looking for the green line to pull away and then get into the cycle. And when it does, it's time to close the trade out, because what do we expect to happen? The green line to pull away again and then get into the cycle.
Wow, really?
That's the game plan. Okay.
Yeah.
So you're scalping.
Oh, yeah, you're right.
All right. Best way to get out of a trade, hey, I gotta go, you know, I got things to do, whatever. There's an emergency. See this little hotkey, exit at market and cancel. We'll pull this up again. Here's our working orders box. When you do this, notice how it closes out the position, but also got rid of our stop, and it's confirmed by an empty box in here. Okay? If you had a loose end in here, you'd have something in there like this. Okay? You'd be staring at something, you'd be like, wait a minute, I thought I was out of the trade. No, you have something going on somewhere. Okay? You can actually right-click and hit cancel, and that's another way to cancel the ticket. Okay? So I would suggest everyone to have that working orders box open somewhere, somehow. Okay? And that's under trading and positions and order management, working orders. It could be floating, it could be down here below. You know, you could minimize it. By the end of the day, you want to stare at this thing. You want to make sure this is grayed out. Okay, especially if we're just, you know, in and out, in and out, in and out. Okay. All right. Let's see if we can find something that actually qualifies.
Yeah.
Okay, we have a bearish cross here, right? Zoom out, zoom out. We have a little bit of support here, right? So we're not trending. And look, we have a double top. Okay. But here, let's go through the motion. So I don't want anyone to touch their dom again. You're going to draw the trend line. Okay. We notified, hey, we notice that there's a cross. Engage the trend line. We start drawing. Okay. What are we looking for? The normal thing, pull back to the BBC, which is the green line. Do we have divergence? Yes, we do. We have a red cycle, and the green line is pulling away, so we got that going for us. Okay, so let's see what happens. So we're going to get short, and we'll be left clicking in the red. Okay, get ready. 28.73. Okay, 28.72 would be 4 ticks. That would definitely be a close under the trend line, so it would qualify. But again, we are not making lower lows. Okay, so we got to be very careful. Okay, so we're just going to go through the motions. Okay, we're not trending, so that's disqualifier number 1. We're not doing anything. I'm just showing you how to execute this. Okay. Notice my bracket is already set. Sell stop checked, buy stop checked, and the factor is 8. So as soon as I get in, it's going to set my stop loss behind us. Let's see what happens.
Yeah, you got a month and yeah, boy, they sure look like it. And then Trump said you got 806 July today. And then
all right, it's doing the normal thing. It's trying to get to the BBC. Right, that's the normal thing, so that's good for us. Yep, it is Nathaniel. Every Thursday between 1 and 2 o'clock Chicago, it really is me. All right, so we're okay. So there's the touch. Now we're looking for the red candle. We can do that because the cycle is red. Okay, our trend line is drawn because that's what we do, because we're creating good discipline and good habits. Okay, the trend line is also drawn because if this sucker turns blue on us, that trend line is required. right? But we're not mucking around with it if it does. So now what you can do is just get your mouse over in the red side of the DOM here and get ready, okay? So if you were going to be proactive, there's the down close. Left click. That is the down close right there, okay? There's the touch and a red close. So here we go. Bearish cross. Pull back to the BBC. The down close. The cycle is red. And we got bearish separation, okay? The trend line was drawn in advance. Good job on that. The only thing this trade is lacking is a trend. We got this bottom over here, okay? But we did it because I was able to show you how to left click and get short, and there's our stop loss right here. Now it's starting to go down. So if it does, and it goes plus 4 ticks in our favor, which it did, we're going to move it, break even. It closed under the MA1, right? And the cycle is getting into the green line's getting into the cycle. So we're going to bring it down a little bit, okay? All right, starting to get into the cycle. We got no risk on the table. We make 2 ticks if it hits us, okay? So we're going to see what happens, okay? We're expecting the green line to ultimately do what it's doing now, get into the cycle. So I'm dragging it down because we're so close to hitting the cycle and we're not making the new pivot low. Has me a little concerned. Okay, and we just got stopped out. But we got stopped out probably, I think it was here. So we might have taken 4 ticks out of the trade or 3 ticks out of the trade. But again, we are not trending. There was a reaction, and I felt confident with it because this, okay, had a nice slope to it, and it was red. And I was figuring, all right, I was able to show you how to drag a stop down. But in all fairness, okay, we really need to be making a new pivot low, okay? Blowing up here inside the training room, Mike's probably short on this trade because it's blown up like this, okay? This, not so much, okay? All right, so that kind of walked us through everything, all right, in a nutshell. So that was pretty cool that happened. I kind of figured that could happen in that scenario. And the reason why I had a little bit of confidence in that is this big thing here, okay? The slope, okay? You want to see slope. This should get you excited, okay? If it's flat, no. If it's got a slope to it, just like, same reason why we wouldn't want to buy this, right? At a 45-degree angle, okay? It's the same thing. All right, so let's see what happens again. Let's try to get short if it pulls back. So it did, ultimately it did the normal thing, right? So what would we expect to happen? The green line to pull away, right? And so we should try to challenge the green line or the BBC. So let's do it. Let's get our pencil out. So now you should have the trend line engaged again. It's right here, okay? Gauge the trend line. Okay, we're ready to draw. It does. So stand by.
Hey, Craig, you looking for it? Yeah. You stepped away on the moment. All right, thanks. You should be back in a couple of minutes. All right, I'll see you.
Okay, so we're waiting for the pullback. Okay, so we're just waiting for it to pull back, okay? So let's see what happens, okay? So we're looking for a shorting opportunity in the indices, okay? And Brett, I know you're new. I'm glad you're here. Okay, that green line is all the way at the bottom. So we're waiting for that green line to pull away. And when it does, the market's going to come back up, okay? It's going to give us an opportunity here, okay? You just have to wait, kind of like a sniper waiting, okay? I'm going to look around, so hold on. Okay, finally the crude oil is going to maybe break out of that box, okay? We're still sideways here. That one's a pretty easy and obvious one, okay? This one kind of hits you right in the face. We're not trading, we're not trending at all, okay? All right. This is kind of more style for the moment, okay? Waiting for the market to come up toward that BBC. And then we're going to draw our trend line, okay? So now the currency should be moving, maybe the gold. There's that gold trade we took a look at. The euro still stuck up here. All right. All right, so I think the best thing we have going right now is the ES. So let's see what happens. Notice how the green line is starting to pull away, right? So here we go. This is no good, right? Blue is no good. That waters down the probability, right? Actually, that trend line would have been like this. Too fast for anyone, okay? Like I said, blue is okay as long as it's flat, but was trying to curl up, so that's a warning flag. We have to be careful here, okay? So no, let's not take credit for that. We're looking for stuff that's easy and obvious here. I'm going to switch gears on you, okay? The mini Dow, okay? Here's a recommendation if you're just gung-ho on trading the mini Dow or the NASDAQ. Instead of a 4-tick range, go to an 8-tick range. The rules are all the same. The only difference is your risk is now 16 ticks. It's doubled up, 16 ticks, okay? Just wanted to throw that out there. So I'm going back to the ES, okay? And you could do it too on the ES if you want to do the ES on the 8-tick range. We could do that too, okay? The same rules apply. All right, so we're looking for the market to pull back to the BBC, okay? There was a small opportunity here, okay? This was a warning flag to me, okay? So here we go again. Okay, so we're going to blow this up so we can see it. Engage the trend line, start drawing, okay? Not our easy and obvious trade, so we're going to pull that off, okay? Wait for the pullback to the BBC. That is a momentum trade, guys, okay? Anytime after drawing the trend line, okay, not only did we break that trend line, but we close also under the MA1. That's also the momentum trade that Michael is advertising in the room too, okay? Momentum trades, okay? And we know if you're brand new, you're going to see those, okay? So that means he's taking his stop to break even right away as soon as they get into profit. Okay, that's a special skill you're going to need if you're going to try that. All right, so here's the pullback to the BBC, right? Notice this is blue. Okay, so the first thing that should hit you right in the face is that waters down the probability, right? Okay, so now it has that little tilt to it, right? It's not quite a 45-degree angle, but it's enough for me to say stay out. Okay, that's that disqualifier. But it is doing the normal thing. It pulls back to the BBC. Okay. So you got to get in the habit of drawing a trend line, right? So your trend line should be like that. Okay. This is a disqualifier. Okay, doesn't matter if it falls apart here. That's a 45-degree angle against you, and I said usually that is associated with a black step line that pierces the BBC. That is the third disqualifier. Okay, so it ultimately did the right thing. Okay, but we have two things that are going wrong for it. Number one, that's blue and at a 45-degree angle, and that black step line pierced the BBC. Disqualifier 2 is here, disqualifier 3 is here, no trade. Okay? What that suggests is a cycle reset. What it means is market might do this, or a lot of times it'll do this. Okay? We've been going down. We've been in a downtrend. We've had shallow pullbacks. We've been doing this, you know, like this. Now we're just going to do a larger retrace possibly. Okay? So you want to stay out of there. You want to stay out of there until it looks easy and obvious. All right. All right. So that's the scoop. Okay? Again, you can use larger time frames. 8-tick range. Here's an 8-tick range. A little cleaner, right? Same rule. Trend line, same way. Okay? Notice how I zoom out. We have a new pivot low, right? That's good for the home team. And look at this. Cycle is red. We have some bearish separation. So if I'm looking at the ES on an 8-tick range chart, we get a close below here. In fact, if we do, let's just do it. Hold on. I do it while we're talking. The only thing that changes, and you notice what I'm doing now, is I'm moving our stop loss from 8 ticks to 16 ticks.
Yeah, that's a
all right?
hard one. Unless you're trading,
it's the same trade, same setup. So if we get it down close, okay, that's a close below this uptrend line that we drew, okay, we would look to get short. And there's the close. All right.
Yep. Always better to have now than finding out what's ending out.
All right, and our stop is way the heck up here. Okay, so now you're going to have a little bit of patience with this guy. All right. So who knows what's going to happen here? But if I'm on an 8-tick range, okay, and I'm staring at this, okay, this is a short on an 8-tick range chart. Okay. That's where you're at with this. Okay, it's the same principles, but on a larger time frame. Okay. I placed the order at 2863.75 because that was the close of that candle. It's the closing bar. Okay. And it's breaking down a little bit. Okay. So if you want, drag that sucker down to break even. I don't care. Okay. Break it down now, and we expect the green line to do what? To get into the cycle, right? Okay. The fact that we're pounding on this low, so I would move my stop down a little bit in case it's a double bottom, right? So now we have a point. There we go. We made a point on it. Okay. That's it. That one was an easy and obvious trade. That one I couldn't rule out any bad stuff. Okay, I couldn't because it had all the marks. We zoomed out. I couldn't find. There was an empty hole here, right? And not only that, it was starting to gravitate toward the BBC. We violated dynamic support. We drew the trend line. We closed below the trend line. We actually exercised some discipline and placed the order right at the closing candle. They had the bearish separation. Has a bearish MA1. The red MA1 was red, and we had a good slope. I mean, that's the easy and obvious right there, guys. All right, that's a little difficult for guys to do because we're on a larger time frame. Okay, and it takes a little bit more patience. okay? And it's still going down. So, we left some stuff off the table, but, the idea was to finally get our hands on something I thought was pretty easy and obvious and take advantage of it. And you know what? And that's a good one to wrap up on, okay? So, if you have questions, send me an email or call me, okay? We do this every Thursday. They're recorded. So if you go out to YouTube and search CFRN Thursday, I put them in a few spots. I think Daniel's Trading, their YouTube channel, it's there, but it's also on Capture the Mood channel, okay? So they're out there, okay? You just have to go out and find it. If you can't find it, just email me and I'll send you the link to it. I'll do you one even better, so do that. But every Thursday for an hour, so just hang out, okay? If you have the time, okay, I think it's worth it if you're going to put the time and investment in doing this. I'm kind of like a broken record. The guys like Bert and the guys that are in here all the time, they go over the same stuff over and over and over. But what you're doing is, just like my kids that I coach with softball, we're creating good habits in practice, all right? Covering the bag, right? Base running, all the basic stuff happens every single day at practice. So when it's game time, we're doing the same stuff, all right? So that's what you're training your mind to do, is look for the easy and obvious stuff and training your eyes to go through the motions that we just went through. So when it does hit you in the face, man, it's just a reaction, okay? And that gives you some confidence. Not every trade's going to win, guys. So that's a hard thing to swallow too, because you might get into something like, man, I still lost money on this, and you just got to think, the probabilities are going to be in your favor over a long period of time. So it's not easy, it's that part of it. So all right, so that's it. So we'll hang out next Thursday. I'll see you in the room in the morning, and if you have any questions, just reach out.